IP Strategy Holdings is one of the most unusual small-cap stocks in the market. The company has transformed from its former spirits business into a digital asset and intellectual property-focused company. Its strategy is now centered around the data ecosystem, validator operations, staking rewards, treasury management, and the long-term opportunity surrounding AI, data, and programmable intellectual property. Because a large portion of the company's value is connected to digital assets, IPST carries substantially more risk than a traditional technology company. The easiest way to understand IPST is to view it as a publicly traded digital asset treasury and blockchain infrastructure company. Its most important assets are its data token holdings and its validator operation. The company stakes its data tokens, earns staking rewards, collects validator fees from delegated assets, and has also explored treasury strategies designed to generate additional income. This gives IPST exposure not only to the potential appreciation of data, but also to recurring token-based revenue. The company's transformation is visible in its revenue mix. During first quarter 2026, IPST generated approximately $1.71 million of revenue, compared with approximately $1.09 million in first quarter 2025. More importantly, approximately $1.45 million of first quarter 2026 revenue came from crypto-related activities, while the legacy spirits business generated only about $246,000. This shows that IPST's investment thesis has fundamentally changed from consumer products to blockchain infrastructure and digital assets. IPST's first quarter 2026 gross profit increased substantially to approximately $1.17 million, compared with roughly $272,000 in the same quarter of the previous year. However, the company reported a net loss of approximately $66.7 million. The enormous loss was largely caused by changes in the fair value of its digital assets rather than by a comparable operating cash loss. This distinction is important, but investors should still recognize that falling digital asset prices can materially damage the company's balance sheet and shareholder equity. At the end of first quarter 2026, IPST had approximately $42.8 million of total assets, approximately $10.4 million of liabilities, and roughly $32.4 million of shareholders' equity. The company held only about $92.7 thousand of cash, meaning its financial position depends heavily on its digital asset holdings. Approximately $24.8 million of intangible digital assets were reported at the end of the quarter. Therefore, traditional balance sheet analysis is less useful here than tracking the company's digital asset value per share. The company's data treasury is the center of the investment thesis. By June 2026, IPST reported approximately 32.9 million unlocked data tokens staked. Since launching its validator operations in September 2025, the company had accumulated approximately 2.47 million data tokens in staking rewards. Management estimated that the existing stake position could potentially generate approximately 3.08 million data tokens annually if the estimated blended yield remained around 9.35%. IPST's validator operation could become one of its most important recurring economic engines. During June, the validator generated approximately 200,652 data tokens from staking, along with approximately 14,127 data tokens from validator fees. Management also reported approximately 99.98% uptime during June. If the company can maintain strong validator performance and attractive staking yields, it could continue increasing its data holdings without relying entirely on external financing. IPST has also attempted to make its data treasury productive through yield enhancement strategies. The company reported generating approximately $424,000 of gross income from its treasury yield program. This strategy could potentially provide another source of income beyond ordinary staking rewards. However, investors should not assume that these yields will remain constant because treasury strategies can involve market, liquidity, counterparty, and execution risks. The long-term opportunity goes beyond cryptocurrency. IPST is positioning itself around the broader idea of programmable intellectual property and AI-native data infrastructure. If the data ecosystem successfully attracts developers, applications, and commercial use cases, IPST could benefit from both the appreciation of its treasury and increasing activity on the network. However, this part of the thesis remains speculative because the ecosystem still needs to demonstrate substantial real-world adoption. The company's biggest strength is that it combines asset ownership with yield generation. IPST is not simply holding data passively. It is staking its holdings through a validator, earning additional tokens, collecting validator fees, and experimenting with treasury strategies. If data appreciates while the company continues accumulating additional tokens, the value of the treasury could compound significantly over time. The biggest weakness is IPST's dependence on data. If the token price falls significantly, the value of the company's treasury can decline rapidly. The first quarter financial statements already demonstrated this risk, with digital asset valuation changes contributing heavily to the company's large reported net loss. Therefore, even if the validator business continues operating successfully, shareholders can still experience substantial losses if the underlying token performs poorly. Dilution is another major risk investors need to monitor. IPST's outstanding share count increased during 2026, and the company has the ability to issue additional shares. Future financing could provide the capital necessary to expand the business, but it can also reduce existing shareholders' ownership percentage and lower the value of data assets on a per-share basis. For this reason, data holdings per share may be more important than simply looking at the company's total token holdings. IPST's financial quality is currently weak compared with established technology companies. Its cash position is small, traditional profitability remains negative, and a large percentage of its assets are connected to digital assets. The company therefore depends heavily on the performance of data, its ability to generate staking income, and its access to capital. Investors should not value IPST using traditional PE multiples because the company is not yet consistently profitable. For 2026, the key objective is proving that the new business model can generate sustainable economic returns. I would focus on validator revenue, staking rewards, treasury income, data holdings, data value per share, and share dilution. If these metrics continue improving, the company could establish a stronger fundamental foundation. However, the stock will likely remain highly volatile because the market is also pricing in expectations for the data ecosystem. The 2027 opportunity becomes much larger if data adoption accelerates. In a successful scenario, IPST could continue accumulating tokens through staking while its existing treasury appreciates. Additional validator delegations could increase fee income, while greater ecosystem activity could create new opportunities around AI, data, and intellectual property. Under such a scenario, IPST could transition from a highly speculative microcap into a more recognizable public market proxy for the data ecosystem. In my bull case, data becomes a successful AI and data infrastructure token, network adoption increases substantially, staking yields remain attractive, and IPST controls dilution while continuing to grow its treasury. Under those conditions, I believe IPST could potentially reach approximately $15 to $25 per share during 2027. A move toward the upper end would require both strong DATA appreciation and a significant market premium for IPST's treasury and validator business. My base case assumes that data survives and grows but remains a relatively niche blockchain ecosystem. IPST continues generating validator revenue and staking rewards, but the company does not become a dominant AI infrastructure platform. Under this scenario, I estimate a reasonable 2027 range of approximately $6 to $12 per share. This scenario assumes moderate ecosystem growth without requiring an explosive crypto bull market. The bear case is considerably more dangerous. If data loses significant value, network adoption remains weak, staking yields decline, and IPST needs to issue additional shares to finance operations. the value attributable to existing shareholders could fall sharply. Under those conditions, I would estimate a potential 2027 range of approximately $1 to $4 per share. This is why IPST should be considered a high-risk speculative investment rather than a traditional growth stock. My 2027 valuation framework is $1 to $4 in the bear case, $6 to $12 in the base case, and $15 to $25 in the bull case, with an extreme bull scenario potentially reaching $30 or more. The extreme bull outcome would require substantial data appreciation, strong ecosystem adoption, continued validator growth, and limited dilution. These targets are scenario estimates rather than company guidance. The most important risks are data price volatility, shareholder dilution, limited cash reserves, financing requirements, regulatory uncertainty, blockchain network risks, and the possibility that the data ecosystem fails to achieve meaningful adoption. The company's dependence on digital assets also means its financial statements can experience very large swings, even when the underlying validator operation continues functioning normally. My overall rating for IPST is speculative hold, high-risk speculative buy for investors who fully understand the risks. I would not classify it as a conventional fundamental buy because profitability, cash flow, and financial stability remain weak. However, the combination of a large data treasury, validator operations, staking income, and exposure to AI, data, and intellectual property creates significant asymmetric upside if the ecosystem succeeds. IP Strategy Holdings is essentially a high-risk bet on the future of data, blockchain infrastructure, AI-native data, and programmable intellectual property. The company's validator business provides a real operating component, while its large data treasury creates significant upside if the ecosystem and tokens succeed. But the same structure creates substantial downside if data declines or adoption disappoints. My 2027 base case is $6 to $12, bull case is $15 to $25, and extreme bull case is $30 or higher. The most important metrics to watch going forward are data treasury value per share, staking yield, validator revenue, dilution, and actual data ecosystem adoption.